Good evening, everyone. This is Wayne, and this is the video version of the trade report for Wednesday, May 23rd, 2018. Well, it looked like we were going to have market collapse part 2. But then the Fed stepped in. Stay tuned to find out more. Greetings, everyone, and thank you once again for joining me as I go over the events, actions, and activity of the financial markets in today's very interesting trading day. Well, and actually, a discussion of today's trading day is not complete without a revisitation of yesterday's trading day and the overnight session in between yesterday and today. So let's get to that. What happened yesterday was basically a sideways slop fest, and then President Trump came out and said he was unhappy with the way that the China trade negotiations were going, and that caused a pullback in the market. Well, I mentioned at that time that this type of action, as it relates to the way that we've seen this type of thing happen and then get resolved in the past, presented a buying opportunity, and that I had actually gone long the market. And how I did that was by buying call butterflies in the Russell 2000, the RUT, R-U-T is the ticker symbol. And little did I know that the extended session would begin to get beat up pretty badly. And I woke up this morning, because I do try to get a little bit of sleep in between sessions, even though the market seemingly never sleeps, except, of course, on Saturday and part of Sunday. I woke up about right about here. So this area right here, and I was just, whoops, hello. I got a little arrow there. So right in this area right here. And I waited a little while and saw the market starting to recover. It took a little bit of a dip, never did revisit the overnight low, and started to go a little bit higher. And this buy signal here was not lost on me, even though volume was not very significant, and it rarely is in the extended session. But I did see that momentum had begun to turn to the upside. So when it got into this squeeze here, which is the name of this indicator, and a squeeze is basically when price consolidates so much that it just begins to condense the energy and the power that it has, and it trades in a very tight trading range. Oftentimes with upside momentum moving into, without the ability for the market to revisit a previous low, that means that we're going higher. So I added to that Russell 2000, well, I shouldn't say it. I actually didn't add to the Russell 2000 trade because I couldn't do that until the market opened. But I did go long using the S&P futures, which of course I can trade in the pre-market. And then after the market opened, I added to the Russell 2000 trade, believing that the market was going to go higher, which it did. And then, as we know, the market went lower, and then we kind of consolidated higher. And then today was the Fed minutes. Now, we have the FOMC meeting announcement that happens once every 6 weeks, and that's where the Fed talks about the state of the economy, whether or not they're going to raise interest rates, how many times they're going to raise interest rates, and any other economic data of import that they feel needs to be presented for the purpose of just giving the transparency that is due the American people and the politicians and, of course, all of us market participants. Now, the main factor that was being looked at for today's FOMC meeting minutes release, and the meeting minutes come out, I think it's 2 weeks after the FOMC meeting announcement, which gives you a granular look at what the meeting actually was all about. So what everyone was looking at was to see if there was any kind of a tell as to the frequency and the number of interest rate hikes that will take place in 2018. And it was a very bullish portrayal in the meeting minutes. It looked as if the Fed is probably only going to raise interest rates 3 times, and they're going to do it only as needed. So that is very bullish from what was said as not that long ago, as about a month ago, where they were talking about raising interest rates 4 times for sure. They may do it 2 times in a row. So a lot of things have changed since that bit of information. And the market, when interest rates are looked at as not going to rise as fast as originally anticipated, begins to move higher. And this area right here, this green bar, was the point in time when the Fed meeting minutes were released. Now, trading algorithms are a big part of what moves the market when there's an important news data, and in this case, economic data news release. So the market went up, and then it's not uncommon to see a move down again. But this move down was very tepid. And then we started going back up again. So another move down basically provided a moment of consolidation, and then we went higher into the close of the regular session. Very bullish close to the regular session today. And of course, this chart, it bears mentioning, is the S&P futures. So we have a market that is poised to go higher. And one of the most important components of today's trading, and I'm not going to tell you what it is until I get the chart up here. It's going to be a little bit of a tease. Let's get that. And this, of course, is the S&P futures daily chart. But I do want to show you the daily chart of a stock that you've seen before and we've gone over before. This is Amazon. Now, what do you see here? Well, you see a stock that has tested the 786, 1, 2, 3, 4, 5, 6. And the last time was today, 7 times, and has not been able to break through. And that 786 Fibonacci line is at 1563.48. Now, it has broken through, but it hasn't closed below it. So we've got this rather significant Fibonacci line in the sand. And today we generated a buy signal in Amazon. Now, we did not make a new all-time high, but with the type of move that Amazon had today, Amazon closed up $20.46 after being down almost $15 at the beginning of the day. So a $35 turnaround from the low of the day in Amazon, extremely bullish. And so we're looking at Amazon potentially as leading us out of this morass that I mentioned yesterday was kind of plaguing the market. And if we take a look at the Dow, we can get another sense of what I was talking about. This is one of the stronger markets, and of course it hit its head on resistance today, but did close on its highs. So we've got a little bit of a battle ensuing here. Bottom line is the market wants to go higher, but it does have some work to do. And that's a good thing, because the market knows it has this work to do, yet it's doing it. So that's the dynamic that's in play here. Now, yesterday I talked about the NASDAQ being really weak, one of the weakest index. Well, today it must have heard me, because it says nobody's going to talk about me like that, and it really came on strong. So it opened, it gapped lower at the open, and then it just zoomed higher. Again, closing on its highs, very bullish. So we will now move over to the Russell 2000, the RUT. And now the RUT has been very strong lately, but today it had a little bit of an issue, but I have been looking for the Russell to pull back. Now, we got a nice pullback yesterday, but today, even though we did get a move lower at the beginning of the day, the Russell recovered very nicely, just like every other index. Didn't go a lot higher, but closed well off its lows and actually closed higher than its open and closed higher than yesterday's close. So we have a bullish candlestick pattern in the Russell, even though it was the weakest market of all. So let's take a look at the S&P. The bottom line in the Russell is that it is also looking as if it will go higher as well. So this particular pattern, candlestick pattern in the S&P is, well, okay, let's back up just a second. So this candlestick pattern from yesterday is a bearish engulfing. That means that the market looks like it wants to go lower, and it did, but it recovered. And at the end of the day today, and by the way, that chart pattern, that bearish engulfing, requires confirmation, which it did not get. Now, this is another candlestick pattern called a piercing pattern, a bullish piercing pattern. So this also requires confirmation. Let me make that a little bit bigger so that you can see it a little bit better. And let's get this going here. There we go. So if we take this and we look at the candle moving basically into the body of the previous day's candle, and it's piercing that energy of the candle, the price of the candle. This, like I say, also requires confirmation, but it looks like we're going higher tomorrow. So we have confirmation in all the indexes that this market's going higher. So, I always ask the rhetorical question. So what would confirm a move higher tomorrow? Well, you know the answer, whether or not you know it right off the top of your head or not, but the VIX. The VIX went quite a bit higher today and then collapsed and went significantly lower. So once again, the VIX is confirming higher prices. We actually made, let me see where that low comes in. The low of the day, we actually made a new closing low. And when I say a new closing low, the last time we closed this low was back on January 29th, which was just at the beginning of the crash, the correction, the February low. So once again, we're getting confirmation, and we're not really getting that move higher that I've been expecting. We still have a little bit of time before this area comes into play, but the fact that we're going lower in the VIX, and the VIX just can't seem to go higher and stay higher, we're getting as many bullish signals as we possibly can get in this market, and at some point, it's got to break free and go higher. All of this is setting up for a move higher. And that's my thesis for tomorrow. I think we do go higher. I think this market has had enough CRAP. It's tired of just kind of lollygagging around, and it really wants to go higher. So if we look at today's action, once again, we can see where, yes, after the open of the regular session, we had a nice push to the upside. We got kind of whacked to the downside, went up again, came down again, went up again, came down again. And you can see where this action right here was just yikes, just not really tradable per se. And it was relatively low volume as well, which makes it even more difficult. But then the Fed came in, brought the market higher, had a little bit of a pullback, and then went higher. So we were making higher lows and higher highs, which is very bullish. And then we closed on the high of the day. And now in the extended session, even after a little bit of a pullback, we're going even higher here. And over here, and let me go ahead and clear that. This is the Russell futures over here. The Russell was a little bit rough today, but it's had a very good run. And market participants are looking for a little bit of a down move, which they didn't get today, which means the Russell's even stronger than everyone thought. So the Russell kind of came up off of that low that it made and closed not on its high into the close, but did a very good job of recovering from the lows of the day, which looked like it might collapse into on this move here, but never did. Now we've got the Dow that looked a little bit rough until, again, the Fed came in and kind of saved the day. Beautiful move into the close, actually halfway through the day. Beautiful move all the way through the day for the Dow, and the Dow did close higher. And then this is the NASDAQ. I just was in awe of the NASDAQ today. It started going higher at the open, did a little tip of the hat to the down move, this one that we saw in the ES, the S&P futures, but then it was just all uphill from there. The NQ, the NASDAQ futures, and the NASDAQ by extension, just got bought. And that's where, of course, Amazon lives, or Apple lives. Netflix had an amazing day today. Should just take a real quick look at the Netflix chart. And I do just want to give you a couple of tidbits about what I traded today. Look at this, and I didn't even notice this. I keep saying Amazon. Netflix closed at an all-time high today. So again, we have a stock that has been a market leader that is once again rising to the occasion. It put in a buy signal 2 days ago, and today it just rocked higher. And there you go. New all-time closing high on Netflix. Google closed up $10.65. We've got NVIDIA up $4.84. Ralph Lauren apparently had earnings and is up $16.72 today. Was not paying attention to that. But Tiffany, and I never talk about Tiffany, but let's just take a real close look at that stock today because it reported earnings. And yeah, look at that. Isn't that just craziness? So you've got yesterday's close in Tiffany and today's open in Tiffany. So yesterday's close was like $102 a share. Today's close was $126 a share, a $24 move. It's about a 25% move in a stock. You never see that kind of a move in a stock. So Tiffany made the market very happy today. And Tiffany is not a market leader, but the anomaly that it is, and the fact that it went up 25%, it gets a significant honorable mention in today's trade report as a result of it. So what I want to do is show you what I traded today. Like I said, I bought some bullish butterflies in the S&P futures, in the Russell Cash Index, which is ticker symbol RUT. And I also bought puts, which is a trade that you enter because you believe that what you're buying the puts in will go lower. And I bought them in an ETF, ticker symbol VXX, and what it does is it mirrors the volatility in the market. And I bought those puts at the high. And every once in a while, a plan comes together. And so it has come down pretty good. So I'm in profit on those. And so everything's looking pretty good. Not only in my portfolio, but for the market to go and remain bullish. So we shall see how tomorrow plays out. Obviously, everything I just said and am looking for and am developing a thesis for is contingent upon the market operating in and of its own metrics and the dynamics associated with the economic data that it currently understands and knows, and does not take into consideration tweets by the president or any other geopolitical dynamics that might occur overnight or whenever. So that's the caveat I'm issuing. Now, the market is in quiet time right now. And so with that, trade safe, trade what you see. If you choose to trade at all, good night and good trading.